Hey, this is Danielle, and today I'm going to be going over a buy the dip opportunity in Meta. So, looking at this stock, you can see that it was down 2.24% today, right down into 325. And, what's great about this pullback is it pulled back directly into the 50 simple, and buyers came in. So, I love it when a stock pulls back to the 50 simple. It's a pretty key area of support, especially when that level overlaps with a key psychological value, in this case, 320, in combination with a daily squeeze and just an overall longer term bullish trend. So, if you look at this trend, you can see that, you obviously have a very nice, relatively straight upwards trend. You have a few moments where the stock dips and, well, buyers come in and it just keeps going higher, right? So, what I'm looking for on a chart like this is looking at basically the overall trend, trying to stick with that trend and look for setups on the higher time frame charts, like this one right here. This is a weekly squeeze setting up, positive volume. You also have an end of the year rally. You also have January earnings report. A lot of different reasons, a lot of different catalysts for this thing to keep heading onwards and upwards into 350. So, when Meta dipped today, I did go ahead and start buying it. How do you start buying it, you may ask? Well, I did this with a bullish butterfly. Essentially, I was looking at critical areas of resistance and overhead targets. There is this area right here at 335. You can see that that's where there's a lot of price resistance. I think that's a pretty decent target. You're at 325, so it's about $10 higher. I also like the 340 price target. That would make for a return back up to this previous high. And then ultimately, I love the 350 price target because that is a gorgeous key psychological value. Um, that is also where you have your Fibonacci extensions for that weekly squeeze. So when you're looking at this chart, basically the way that I would do it is I would just trade it from one decision level to the next. So, you first target 335. If and when you hit that price target, you identify how the volume is moving. Is there still incoming volume? Is there still forward pushing momentum? Or is the price hitting that level and falling? If the price hits that level and gets rejected, reverses, obviously then you're not going to look for the next price target. But if it hits the level and keeps going, that's where you continue onwards and upwards to your next target at 340. Same thing when you get to that zone, if it hits it and stagnates, then you have to, lower your expectations a little bit and think that 350 price target will come a little bit later rather than sooner. But if it hits it, busts through it, and keeps going, you're onwards and upwards to your next price target. So, the way that I usually trade these kind of things is with butterflies. I think that the 335 price target is just fine, especially if you're, more of an aggressive trader. I don't love trading, 4 days or less, but this is a monthly options expiration week. So I do think that it's possible, certainly, to use a butterfly at the 335 price target. You could just throw on a fly like this, do 325, 335, 345, $2.40. And for that you get about a 1 to 3 risk to reward ratio. So that is one possibility. The way that I did it, I stretched it out a little bit further just to kind of encapsulate the Santa rally into the end of the year. And I gave it until December 29th. So that would wrap it up pretty nicely, just right here at the end of the year. You have a $16 expected move in that time frame. So, I think 335 is more of an easy target, and 340 is it's a little bit more of a stretch, but then you get a wider range. You get a $15 range instead of a $10 range. Your debit is going to be a little bit higher, but you still have about a 1 to 3 risk reward ratio on this. So I like this one. I think this one, gives you just a little bit more time, but I also will stack my butterflies as well. When I say stack them, means I'll do, one in the December 15th series, one in the December 22nd, one in the December 29th. That way you can kind of stair step it higher, because as I mentioned, you have multiple different price targets, 335, 340, 350. So then that way, let's say, for example, the market tanks this week, it's, down 2 days, and then it rips higher next week. Well, maybe your butterfly for this week doesn't work at 335, but then you have one later on at 340, that kind of thing. So those are all different options for you. And yeah, that's what I have for you today. So I like this buy the dip opportunity in Meta. I own the stock. I'm going to start trading this in the options market. Just started right before the close today. Let me know if you like the idea. Other than that, I'll see you in the next one.
Hey traders, thanks for watching this video. If you want to make sure that you get all of our free trading content, make sure you hit subscribe, and also give us a like and comment down below. If you want to learn more about us, and if you want to join us for live trading in real markets with real money, make sure you go to simplertrading.com, where you can join us for more info. Thank you very much and have a great day.